Hello everyone, Ugodre here, and this is my money brief brought to you by Nairametrics, of course. All right, so on today's money brief, I want to touch on the Monetary Policy Committee meeting that was held today, being the 23rd of July 2024. And so, straight right into it, the MPC, it's a committee of the central bank made up of economists and central bank governors that meet occasionally to determine what the direction of the interest rate will be, which is called the MPR, the monetary policy rate. And so today, they moved that rate from 26.25% to 26.75%. So that is a 0.5% increase, or what economists would term a 50 basis point increase. So 100 basis point is 1%. So when you say 50 basis point, that's half a percent. 200 basis point is 2%. So they've moved it yet again. This is not the first time they are moving it this year. In fact, from what I have, my data, the MPR, which is the monetary policy rate, or the interest rate, has gone up by 800 basis points since this year. That is 8%. That is unprecedented. Never, ever, ever have I seen the monetary policy rate rise this high and this fast in such a short period. The closest ever was 6%. There was a time we went from 6% to 12% or so, some years back. But never seen it, go this high since 2006 or so, when I think it was Soludo that brought MPR. I think I have that data somewhere. I have it here. It gotta be 2006. Never seen it that high. Yeah, about that. Soludo's time was 2006, and I've never seen it go. Last time it went this high was between 2010 and 2011. It was 6.25 around December 2010, and then by October 2011 it was 12%. So that's the last time I ever saw it this high. Anyway, there were other things that he mentioned. Adjusted the asymmetric corridor from plus 100 plus or minus plus 100 slash minus 300 to plus 500 slash minus 100. Guys, what does that mean? Basically, what CBN is saying is that now they can lend to banks at that MPR rate, that's 26.75% plus 5%, right? So that's, if banks want to come and borrow from CBN, they're going to be borrowing at that rate. 26.75% plus 5% is 31.75%. I hope my math is correct, right? So, and then if they are going to be borrowing from banks, or banks is going to be lending to them, then it will be MPR less 1%. So that's basically it. So again, the direction is that they are going to be a lot more hawkish. They just want interest rate to go up so that can drive down inflation. That's the only way the central bank knows how to fight inflation. And this central bank says they are not going to go the way of the Emefiele central bank. The Emefiele central bank felt like, look, you can fight inflation by increasing rates and by trying to deal with the root cause, maybe investing in businesses through intervention funds and all that, and you can hope that maybe that can just lower cost of doing business. But that didn't really work that long in the previous government, and we all know what happened. Money supply went to almost 100 trillion, currently around almost 100 trillion now, and the conventional belief is that that's part of what contributed to the inflation that we have at the moment. And so the current central bank doesn't want to go that route anymore. And so they are focusing on increasing interest rates. And that's why interest rate keeps going up, because they feel like that's the only tool they have. And they've said that the government should focus on trying to drive down the other issues that tend to contribute to interest rate, to inflation. What is interesting as well is that the central bank did admit that they know that inflation went up in June, month on month, compared to other months where you've seen a drop. And that's a huge concern. And they alluded that could be because of food, increase in staple food and consumer items that you and I consume every day. We've been experiencing it. Things have been expensive. And so the CBN says that they believe that maybe this plan by the government to give a 150-day duty free to importation of maize, hawks brown rice, wheat, and cowpeas might maybe help bring down inflation. Seems like a tall order, though. Seems like I don't really see how that works in the immediate, but I'm optimistic. Let's see what happens. But beyond that, there's really nothing that I can see that is sort of like a line of sight to say, oh, hey, um, looks like inflation is going to come down. Nothing really from the communique, and even throughout his interview, it was just all optimistic, not really based on any data that he provided, and so it looks like we're likely going to see be on this high interest rate levels for a while. However, I think this is the slowest increase that I've seen in a bit. They were not aggressive as they were in the last MPC meeting. So 0.5% is actually the slowest that I've seen. I think since Cardoso came on. So maybe they are now gradually raising rates, or maybe they think that they're at some point, because the way they are going, who knows? We're thinking that we're probably going to be at about 30% by the time they meet in September. But looks like maybe we're not going to get anywhere close to that this year. What does this all mean for you guys? And that's really what matters. What it means is that if you have a loan from a bank, expect a letter from your bank anytime soon, because that 0.5% increase that they've just announced is going to be passed on to you. So lending is going to continue to be borrowing, rather, is going to continue to be more expensive for companies, and lending is going to be more lucrative for lenders. So those in the lending space, they're having a swell time at the moment. And so if you're a borrower, I've said it, this is not really the time to borrow, except you absolutely have need for that borrowing, because borrowing is very expensive now, and the central bank is saying they don't want you to borrow. That's it. It's just expensive because there's just too much money out there. They want you to save. It is the best time for savers. I've said it, it's going to be a while before you see anything like this in terms of treasury bills, the sort of yields we're seeing. Treasury bill yields are as high as 29%. And so this is the time for borrowers. So if you've got loose cash and you don't have anything to do with it, I think one of the best investments you can do is to buy treasury bills. If you don't want to buy stocks, of course, you can buy treasury bills and all this, automobiles, if your pocket is that huge, because of those sort of interest rates. And that's where we are now as a country. And that's the message the central bank once again has put out there. The only tool that they're going to use to keep fighting inflation is interest rate, and that is why interest rate, or MPR as we call it, has gone up to 26.75%. Before I go, there was also something else he mentioned about Forex, about the exchange rate, and it was interesting that he didn't panic at all. He kind of said that, look, the depreciation that we've seen over the last few days is largely because of market forces, demand and supply. Even though the central bank did sell dollars to the BDCs, and as soon as they sold dollars to the BDCs, we saw that it strengthened on the official market and even the parallel market. So that made an impact. So yes, it was first of demand and supply, but it was also because there wasn't enough supply. Now, what was interesting, and I think the message I took the most here was external reserves. He mentioned that external reserves was now $37 billion, which means that there was some inflow that might have come in the last few days. In fact, by our estimates, over $2 billion came in about 18 days or so. And that is incredible, because I've often said that if we don't get about $10 billion before the June, where I was going to bet against the Naira, I'm still not necessarily betting in favor of Naira, but I don't think that we're going to see the exchange rate depreciate like it did earlier in the year to maybe 17, 18. I seriously doubt it, not with these sort of reserves that I'm seeing. I actually think that we could be between that 1516 level, between 15 and 16, and I wouldn't be surprised if we drop below 15. Yeah, so for those that are thinking they want to speculate, you better be careful, you might get burnt. With this sort of reserves numbers that I'm seeing, it looks like foreign investors are really bringing in money, investing in Nigeria, even though what they are buying is treasury bills. It's still hot money inflows, not too good, but hey, they are bringing in that money. And now that they've raised interest rate again by 50 basis points, that would also trigger a few more inflows into the country. All right, so that is my money brief for today. If you've got any questions or any comments, or you think that there was something I didn't touch on this particular episode, do let me know. Drop a comment and I will address it as well. And of course, I know you've got a lot of brilliant minds there. If you've got better ideas or better information to share, please feel free, share it so that others can learn. Do have a profitable day ahead. Bye.